Hello friends, welcome to your own channel, Noiseless Investment. Here we try to decode a company based on the fundamentals of the stock and get to know if the company is worth our investment or not. Please note I am not a SEBI registered advisor and these are my personal views. Please consult your financial advisor and do your due diligence before investing in the stock. Please like this video, subscribe to my channel and click on the bell icon to get the useful information on a regular basis. See, the main purpose of this video is to mute the noise the operator creates and as a result the gullible retail investors fall prey to. The purpose is to beat the operators by our own acquired knowledge. Now, this is the website of Tata Consumer Product and Tata Consumer Product is responsible for selling these products. Apart from that, they sell various Tata Sampan, Tata Salt, and apart from that, you can go through the website and look into what exactly are the various products that the Consumer is responsible for selling. Okay, now if we look into the fundamentals of the stock and I go into the screener website, then I see that the market cap of this company is 76,123. The ROC, the return on capital employed, is coming out to be 9.86%. The ROC for 3 years is 9.45. ROC for average ROC for 5 years is 9.47 and the average ROC for 10 years is 9.38. So it is maintaining a consistent 9 to 10% ROC since last 10 years. And if you look into the ROE, so for this year the ROE, the return on equity, is 6.86%. The ROE for 3 years is 6.51%. ROE for 5 years is this much, 6.31. So it is maintaining a consistent ROE of 6.0, around 6 to 7%, which is less than what should be, I mean, norm. So it should be greater than 15%. So both the ROCE and ROE, here it is not maintaining that value. And if we look into the promoters holding, it is coming out to be 34.4%. So even the promoters holding is less. And if you look into the pledge percent is very minuscule, which is 1.20%. And if we look into the debt to equity, it is completely debt free. You can consider it has got very less debt on this company. There is very less debt on this company. And if we look into the current ratio, it is 1.92%, which is 1.92, which means the company is efficiently utilizing its cash which is there, cash and other so the company is efficiently managing its cash is very well. And if we look into the FII's holding, it is coming out to be 25%, and the changes in FII's holding is minus 0.54%. So they have reduced their stake, the FIIs, and the DIIs, they have increased their stake by 0.73%. Now if you look into the sales growth, it is coming out to be 10.9%. So the sales CAGR is 10.9, the profit growth is 11.7%, which is the profit growth CAGR is 11.7%, and the quarterly sales growth has been 14% and it is 18.6%. So the main thing to watch over here is whether they have the sales growth for last 3 years, has that increased. So we can see that it has not increased. So in the sales growth for 5 years is 15.1%, but the sales growth for 3 years is 12.7%. So it has reduced. Similarly, if we look into the profit growth CAGR, average profit growth CAGR for 3 years, it is 20.0%, and it is for 5 years 16.8%. So this is good. Over here they have maintained a healthy differences between 5 years and 3 years, but for this year the profit growth has been 11.7%, which is less than the profit growth CAGR for 3 years. Now if you look into the operating profit margin, so the operating profit margin is in between 13 to 15% around. So this is important because this signifies what exactly the company is taking in its pocket. If we look into the PEG ratio is coming out to be 4.19, which is which leaves little room for the company to grow, because PEG ratio signifies price earning growth ratio. If we look into the quick ratio, it is 1.24%, and the Altman Z score, which specifies the bankruptcy of the company, so it is not going to get bankrupt. Okay, and if we look into the uh, return, so the stock is in uptrend since last, if we compare from the last month. And if we now look into another website which states, one second, investing.com, and if we go and look into the fair values for Tata Consumer product, it is coming out to be 666.32. So there is a downside, probable downside of 18.7%. However, the uncertainty is low here, and these are the pros and cons of this company. Now moving back on the chart for this company, then what we see is the volume. There has been an increase in volume today, and the RSI for this is 66 now. So the company can move uh, in a very short span of time. If it will cross this level, if it will break this level, then the stock has the potential to go till 862, and further, if it will cross that, it has got the potential to move till 900 as well. However, now look into the the score of Tata Consumer product, then the stock score is coming out to be 5 out of 10, which is less. And if we look into the earnings and fundamentals, relative valuations, risk and price momentum, so the earning is 3. Fundamentally, the stock is having a score of 6, relative valuations is 2, and risk is 10, price momentum is 5. So please consult your financial advisor before investing in this stock. That's it for now. Thank you guys. Have a wonderful day.